Welcome everybody. This is the Western Sydney Expo. This is the 2:15 session. So if you have registered for that and would like to come and have a listen to our fixers, then please make your way over and take a seat in the vast auditorium. That seat is available, sir. All right, we've got a little bit to cover, so we're going to kick off in just a few seconds. This session is called, the shorthand, it's the fixers. These guys over here are the fixers. From stress to strategy. So you're going to want to be a part of this one. If you are one of the 870,000 small businesses in New South Wales, which represents 97% of all businesses. My fact checkers are there just to make sure I don't miss a beat. Employing 40% of the state's workforce. So it's great to be here at the Western Sydney Expo. My name's Michael Miller. I'm Director of Mediation Services at the New South Wales Small Business Commission. Mediation service is available for things like commercial leasing disputes and for really any dispute, issue, problem that arises involving a small business in New South Wales. It's the sort of service that you'll want to know about when the time comes, but hopefully it's all smooth sailing, particularly after you listen to our fixers today, hear about some of their strategies, managing cash flow and avoiding some common mistakes and pitfalls. The New South Wales Small Business Commission also has a red tape survey open at the moment, coinciding with the Small Business Month, the month of October. So if you would like to share your thoughts about particular pain points about red tape in New South Wales, then our website, www.smallbusiness.nsw.gov.au, would be the place to start. You'll see a banner up the top which links you to a survey, and we'd love to hear your thoughts about what are the particular pain points or friction points when it comes to regulation, because we are looking at what areas of red tape could be dealt with more effectively. So this session will be about taking control of cash flow before it breaks. What most businesses get wrong about ATO debt and how to avoid costly mistakes. How to reduce ATO debt, not just defer. Why the wrong finance solution can make things worse. And what does work when cash is tight and pressure is rising. We have from Murchison's, we have Sam Stringer, Principal Director of Murchison's Chartered Accountants, who will help you to move from being reactive to proactive. Sam. We also have Michael Moon, tax debt negotiator from Tax Assure, in the middle.
Thank you.
Helping you resolve tax pressure, reduce debt, and negotiate plans that stick. And finally, we've got Renati Barel, a business finance specialist from World Class Finance, helping to fund growth, improve cash flow, and stay ahead of financial pressure. These three work with business owners every day to solve cash flow stress from three sides: accounting, finance, and tax debt. Accounting, tax debt, and finance. We'll get in the right order. There we go. Question one, I'm going to start with Sam. Tell me a bit about Murchison's, what your firm does working with and supporting business owners, and what makes you different to other accounting firms.
So we're a chartered accounting firm in North Sydney. We specialise in helping small, medium business owners predominantly. I'd say 90% of our client base is made up of business owners. We identified some time ago that there's a gap in what people need in a small business in terms of service and partnership from an accountant. And there's a significant lack of these small businesses having an advocate in business. So We aim to partner with businesses, not just do their accounting. The accounting process these days is relatively mundane. It's your year-end accounts, it's your BASs, it's your tax returns, etc. A lot of that's done through online software and the like. Our ability to rely on that as a business model is not there anymore, I believe. There's a lot of businesses need a lot more than that from their accountant, and they should demand a lot more than that from their accountant. So we do a lot of engagements with clients. Most of them we're catching up with monthly or at least quarterly to go through how their business is going, do some forecasting with them. There's always issues that come up throughout each month. Having someone have an objective view, look at their business and challenge them, I suppose. Why is this not the way it should be? What's happened to your margins? Why are your overheads blowing out? Having that person to come in, or that group of people to come into your business, our clients find quite valuable. And it sort of turns the compliance part of what we do into something that must be done. We obviously look for tax concessions and minimise tax wherever we can for clients, but at the end of the day, tax is just another expense item, and people are needing a lot more help than that, we find, in their businesses.
Thanks for that, Sam. The benefit of using professionals often, any professional, is that they have such great insight into a range of different businesses that may be very much like your own, and so being able to partner with a professional like that relieves a lot of pressure, opens up new doors as well. So thank you very much for covering that. Michael Moon, before we get into the details of tax debt, would you like to set the scene a little bit? Tell us about what Tax Assure does and how it assists business owners who do find themselves with ATO debt.
Thanks, Michael, and thanks everybody for coming today. We're a business called Tax Assure. We help businesses of all sizes. Essentially, every one of our clients owes money to the ATO and haven't been able to pay it off either as it accrued or, as the ATO would love it, in a lump sum. So specifically what we do is we get in and the ATO, a lot of you probably understand, are quite tough at the moment and going very, very hard, and I'll explain why that is in a little while. But so we get in and firstly stop recovery action. That's never been more important than it is now because the ATO are going hard and they're going fast. The second part of it is we get in and negotiate payment terms with the ATO. I'm sure a lot of you have heard of the thing called an ATO payment plan. There's payment plans and there's payment plans. My grandmother can negotiate a payment plan, but it may not be a good one. So we get in and negotiate payment terms with the ATO that suit the business rather than what the ATO might be insisting upon. So we set up payment terms that may fluctuate with cash flows for businesses, may have ramps because there's issues that have happened within the business that they need a bit of time to rebuild cash and that sort of thing, and we're going to be talking a lot about cash today. The other thing we do is the ATO, as many people will know, charge interest, and that interest is currently 10.61% compounding daily. So that adds up very, very quickly, and most clients we see 20, 30, sometimes 40, and can be up to 80% of the debt is actual interest. Now, the ATO charge that because they're trying to create a level playing field between those businesses that pay their debt and those that don't. The problem is many of the businesses that don't pay it, there are very valid reasons why they haven't done it. So we also go in and make applications, it's called an application for the remission of interest and penalties, to get the ATO to remove that interest and penalties. And many of our clients, when we do that, it takes them from a position where maybe the business won't survive to where it can survive if they can bring their ATO debt down by 20 or 30%. So, and then the final thing we're doing, and we're doing a lot of this at the moment, a lot of people put payment plans in place, particularly during COVID, and they may have been a good plan then, or they may have been the one that was thrust upon them by the ATO, but we're going in and renegotiating those payment plans because they're killing cash flow in businesses. We had a company recently that we were working for, and they were an earth-moving company. They were actually selling excess equipment that they were actually going to have to buy back in 12 months' time because they had a big project coming up to fund the ATO payment plan. And that was just going to be a financial disaster for the business. So we went in, renegotiated that. They had a plan, but it was just a terrible one. And we halved their repayments on that. Needless to say, they didn't need to sell any more equipment. and we got them out the other side. So that's what we do. We operate nationally. We've got offices all around the world, all around the country for now. And but yeah, we don't lend money. We don't do compliance work. We don't do the work that Murchisons and other accountants do. And in fact, we work very closely with business advisors. Most of our work comes through an accountant or a finance broker or a finance company or a professional advisor. It could be a business coach. It wouldn't matter. We work closely with other advisors. We do our little piece, which is the ATO debt piece, and then we step back. We're a weird business. We hate repeat customers, so we don't ever want to see the businesses again. And if we need to, we'll help them around that in terms of maybe connecting them with the right people to make sure we never see them again. We love seeing our referrers again, but so that's us, and we love helping people. And what gets us out of bed every day is actually helping people, and that's what we're in business for.
Sounds good. We've got a similar approach to our clients. If you're talking to me once, I hope never to have to talk to you ever again.
Yeah, I know. People laugh when we say that, but it's true. I mean, yeah.
Good one. Thanks, Michael. Renati Barel, you're a finance broker. Tell us a bit more about world-class finance and how you assist business owners to get the right finance in place.
Okay, so World Class Finance is a commercial finance brokerage. We specialise in commercial property, business finance and asset and equipment finance. What we really love to do with our businesses is get to understand not just your numbers, but actually your business, how it operates, what your challenges are, and where you want to go with your business, where you're seeing your growth. What we like to do after that is find you the right finance solution that's going to actually fit in line with where you're trying to go, and that's going to improve your cash flow and support your growth opportunities. So we work with businesses every day. We might take care of someone who needs ATO debt refinanced because they've got a huge ATO debt that they can't manage. We look at helping people with cash flow and finding finance that's going to help you support your cash flow. And the other things we do is we help you plan for growth. So we work with you to understand where you want to go and, how that works.
Thanks, Renati. Now we're about to get into the meat of this presentation. So if you are wandering about and wanting to have a listen to some of the common traps, pitfalls, mistakes that people are making, if you're an exhibitor or if you're just visiting, then you're welcome to come and join us or listen in from where you are. We're going to go back to Sam. Now, obviously, you've got a lot of experience dealing with businesses of all sizes across various industries. What would you say are some of the most common mistakes that business owners make that can lead to cash flow pressures? What are some of the red flags that business owners should be looking for to avoid these kinds of issues?
I think the most common mistake is probably a lack of a financial process or understanding of where their financial situation sits within their business. So we see a lot of people that come on board as a client or a potential client or someone that needs help. They may not know what their gross margins are that they're making on their product or service. They may not know what their monthly expenses are. They're not getting the right financial information to be able to see what's going on in their business. It's very common in small to medium businesses. They don't have the time to focus on that. We find a lot. Their predominant goal is to go out and sell what they're selling, which as it should be. A larger business has got a full internal financial team that looks after reporting, etc. for them. There's definitely a gap for small medium businesses where sometimes that doesn't get looked after at all. So a lack of forecasting, a lack of reasonableness in forecasting. So not applying sensitivity analysis to what they're projecting, overly optimistic projections of what they're going to do. No factoring in of what might happen in the outside world. We've seen ones in the past where someone will have a forecast that they're going to create a product and all of a sudden everyone in the world will buy this product. You've got to be reasonable with what you're forecasting. I think having a proper month-end process, etc., in their financial department is non-existent in some businesses, which obviously leads to financial information that's not reliable and is not able to be used to make decisions off.
Month-end process sounds boring, Sam.
It is. It is. It is boring.
Is that why people are not,
I think it is.
diligently
I think
going through their credit card statements, whatever they need to do?
Well, I think everyone has a tendency to bury our heads in the sand when there's a problem rather than face it at times,
Yeah.
right? So
Head in the sand.
Yeah.
Yeah.
If it's something you can stick your head in the sand about, I think people do sometimes. That's why it's important to have people outside the business to challenge on those things and to drive that process, I suppose.
I feel like a doctor sometimes.
A
They
doctor
come in and they want to
sometimes, yeah.
they want to sort of disclose to you this problem that they've been avoiding. It's like a lump. I've
And you
been
can't hide
wanting
anything
someone to
from
check this out for a long time. Can you help me with this?
You can't hide things from your accountant either. That's what a lot of people say to
Yeah.
us.
Often that lumps ATO debt.
Yeah.
In terms of red flags, I think often red flags we see are some common things that are coupled together, I suppose. People that haven't done financials, etc., for quite a while. People who have gone out and got their own short-term junk debt to sort out a solution. People who aren't planning for that debt, that's a big part of what we do as well. Is you'll have a client that says, I really want to grow my business to X dollars in turnover, and we have to challenge them. How are you going to fund that? That can be a costly exercise. Debt can be used and very useful if it's used responsibly. So helping people plan out sustainable debt with people like Renati is a big part of it as well. I think people sometimes have a tendency to self-fund their business for too long. Never take a dividend. Everything goes back into the business. You've got to flick the switch at some point and say, well, we're going to get rewarded, but also make sure that the business stands on its own 2 feet. Tax debt is obviously another one. Businesses with significant tax debt, sometimes it's been left untreated, head in the sand sort of thing again. The ATO was quite lenient for a few years through COVID and didn't push people too hard. And we found that put people into really poor compliance with ATO. They sort of thought the ATO will wait, I'll pay everyone else. I've got an unsecured creditor, I'll pay them when I can. But that's definitely done a complete U-turn in the last 12, 24 months. So those are other red flags. I think the biggest overall theme is people who just don't understand what's going on within the financials of their business. They might have an accountant who's told them, I'm not talking about other accountants, but they might have someone that said, oh, you're making a great profit. And they'll say, this is what I get told, but I don't have any cash. The other side is debtors. They might be making a lot of sales, making a decent profit. People aren't paying them. They don't have a proper debtor management policy. They're paying people too early and they're getting paid by others too late. All those sorts of things combined. And often you'll see 3 or 4 of those things in the same business.
I remember running business before I got into this job many, many years ago, and I felt like I had too much cash on hand. Do you ever see that? Because I did have liabilities, right? But I had, all of a sudden, my cash in the bank was huge, and I thought, I better take a close look at this because I don't want to go spending that just yet until I know my position, and that's where the accountant really came in and helped me, figure out the position.
And we do see that. We see the opposite side where you've got people who are completely exposed in terms of they've built up significant earnings in their business. They might own the company as an individual, and so all those earnings are at risk if they have a dispute with a creditor.
Absolutely. Yes.
So we do a lot of work with restructuring of clients when we first meet them. You may as well, I always go with, you may as well protect what you've already got before you try and save tax or make more. We do see that. People have a large amount of cash. We go, well, it's sitting there, you haven't declared a dividend out. It is available to any creditor that decides to go after your business. So, all of that goes along with that monthly planning, forecasting. We're not just forecasting on profit. We're sitting there going, well, how much do you want to rip out of your business in the next 12 months? What do you want to get out of this? We're not just doing business for the sake of it. It's business to grow your own wealth and to improve your life and to improve the life of others. So that's what gives us the passion to help people to put those things in place.
And you've got to get onto it sooner rather than later, no matter what. Earlier is always better to be talking to somebody. All right, I could talk to you for ages, Sam, but I also want to hear from Michael Moon. Now, I know that when businesses face cash flow pressures, one of the areas they're going to avoid is paying tax debt. We've all read about ballooning ATO debts to things like COVID and bushfires and all sorts of dramas that are out there in the current economic climate. But could you please tell us a little bit more about this? And what is that situation with the ATO Commissioner collecting tax debt at the moment? What would you say? I've heard plenty. I'd like to hear from you.
Yeah, sure, Michael. And obviously, we focus on ATO debt and we look at the world of business through the lens of the ATO debt. And look, it is, I sort of do a lot of sort of speaking engagements, and one of the things I say is it's a very, very tough time at the moment to owe money to the Commissioner, to the ATO, because, and I'll explain a little bit about why and how we got there. But essentially, it's a numbers game. There is a numbers issue here, and you mentioned COVID, and I think that's a good cut-off point, because if we look at what the overall ATO debt was prior to COVID, and what I'm talking about here is not debt that's in dispute or debt that's part of an insolvency and everything. This is hand on the heart. Businesses say, we owe this money, we just haven't been able to pay it. Now, prior to COVID, that figure was roughly around $26 billion, which sounds a big number, and it is a big number, but to put it into context of where we're at now, and I'm not talking about the big end of town. Two-thirds of this is owed by small business, and that has remained constant throughout. Roll forward to where we are now, and it's $56 billion. So it's more than doubled, and we actually think that number's very conservative, because that's the number that came out 30 June last year. So we've got debt since then, and on top of that, it doesn't include what the Commissioner doesn't know about, i.e. things that haven't been lodged. Now, pretty much every client we see has unlodged BAS, income tax returns, that sort of thing. So we think the number's well in excess of $60 billion. So again, that's a big number. And what that means is two things. There's a lot more businesses out there with ATO debt. And that's one of the things I always try to say when I talk to a business owner. You're not Robinson Crusoe here. There's no shame around this. Businesses have had a very, very tough time over the last few years. But the worst thing you can do is stick your head in the sand and it's like the lump that we talked about. Go and get the lump. Well, we'll cut it out. Let's go and get it sorted. And the sooner you do it, you'll sleep better. You'll stop worrying about this sort of thing. But that's the environment we find ourselves. And what that has meant is that we've got a new commissioner, and there's incredible pressure to do a number of things. Firstly is to get that number down. Now, there's two ways the ATO can bring that number down. They can collect it, or they can write it off. And you might say, well, writing it off's a good thing, but writing it off means winding businesses up. So, of course, they'd like to collect it. Collecting takes 2 to 3 years. Writing off takes 2 to 3 months. And there is still a priority within the ATO, it's taxpayers' money, to collect the debt. But the main priority is to get that number down. The second thing they want to do, and we talked about, what was happening during COVID, is that a lot of businesses got into bad habits. And in partially because they were doing what the ATO said. Keep lodging, but don't worry about paying. We all thought the sky was falling in with COVID. Keep your cash close just in case we need it. That went on far too long. We were ringing the ATO trying to pay money, and they said, no, everything's on hold. But what that meant is that, there's a lot of businesses out there with ATO debt, but our client base hasn't changed dramatically, and we act for businesses with $50,000 in tax debt up to, I think our largest is about $9.5 million, and everything in between. We do a lot of work in that SME space because that's where the problems are. But our average debt that we were dealing with prior to COVID and floods and bushfires and all the things that have been going on was around $400,000. It's now bumping up to the $1 million mark, and we're regularly seeing debts well in excess of $1 million. So that means that there is a real need for these to be addressed, but it also means, and that's where people like Renati come in, a lot of businesses we would put them into a payment plan and pay it out of cash flow. And we're still doing that every day of the week. We would see, every week we'd see at least a dozen businesses, if not more. But there are now a lot more businesses that need cash to get in, and it's part of the reason why the three of us, are on this panel together, because you need to get your systems and your processes right, and you need to make sure we're a weird business. We don't like repeat customers. So we don't want to see them again. So we want to make sure that whatever brought them there is fixed, and sometimes they need funding to get out the other side. So, and then there's probably a third thing going on, and there's been the ATO have been seen as a very dormant creditor, and and so forth. And there's certainly a message going out to businesses, and these are businesses that don't owe money to the ATO, that we're not an easy source of credit, because people often go, haven't got enough money, we'll just borrow from the ATO, we just won't pay our tax. No applications, no nothing. It's certainly not easy now, because if you do that, your business is heavily at risk. Secondly, it's certainly not a cheap source of credit, because, as I mentioned before, 10.61 compounding daily is a big number. There's a lot cheaper finance out there. It's also, since 30 June, no longer tax deductible, which actually makes that an even more expensive thing. So, there is really a lot going on. The ATO are tougher on payment terms, they're tougher on the removal of the interest that I talked about before. But, there are solutions, but your businesses really need to engage quickly.
So ATO debt is kind of that junk finance, really, isn't it? That's one bad way to sort of manage your finance. Now, Renati, you see a lot of businesses. What would you say are some of the mistakes that businesses are making when seeking finance, or issues that you see with their existing finance structures? You need a microphone.
So one of the main issues I'm finding is more of a cash flow issue. A lot of business owners are not actually planning for the ups and downs of when their business has a dip, or when their customers are paying quite slowly. At the moment, a lot of businesses are suffering from a lot of cash flow problems, and so they're paying their creditors quite slowly. So you'll hear a business say to me, oh, none of my customers are paying, and when I ring them up, they're saying to me, when my clients pay me, I can pay you. So this is a real huge problem at the moment that's going around, is that everyone is paying their debtors quite slowly. Their creditors quite slowly. And
they're all using the same $20 bill.
They are, correct, yeah. So one of the biggest problems I'm finding is we like to work with businesses to say, look, at the moment your business has no cash flow problem, and we like to see that, but why don't we plan for, we know it, in June or in July or towards the end of the year, you might have a closure period, and your business might have a dip there, and you won't have money coming in for 2 months. So you need to plan for that, so you can still pay your staff, you can still pay all your debts. So one of the main things I'd like to say, a big mistake is not planning for the quiet periods and the times when you can't actually, your cash flow is looking really, really bad, and you can't actually pay your bills. So if we plan for them, we get the right finance in place when you've actually got a good cash flow position. Then when you don't have a good cash flow position and things have slowed down, you've actually got that money to rely on, and you've already got that funding in place. And I think that's really, really important at the moment. That's one of the main ones. The other probably really big issue we're finding as well is a lot of business owners are getting they're looking on the internet for their finance at the moment. There's a lot on the internet. You can see it all over there. There's, quick finance, no documentation, money in your account tomorrow, and people are going, wow, this looks fantastic. What they're not understanding is, what am I actually paying for this finance? Is this finance the right kind of finance for what my problem is? So, as I said before, if your problem is slow paying customers, that's not really an issue where you don't have money in your business. That's an issue with your cash conversion cycle, how fast the money is coming back into your business. So what can happen there is people will go out and get a quick loan from one of these people on the internet, and they have no idea what they're paying, because a lot of the time the interest rate is not quoted, or it's quoted as a simple interest rather than a annual percentage. They're giving them factor rates instead of a proper interest rate. And you can see some of these loans are well into 55 to 75% interest. And there's no way a business can recover from something like that. I mean, that's way too much. So a lot of these quick loans, even though they look easy, and even though there's smiling faces on the internet and you're seeing loads and loads of these offers, I would steer clear of something like that, and I would actually go speak to a broker and make sure the broker you're speaking to is talking to you about your business, talking to you about what your problems are and how they can help you fix it. Because if they're not asking you the right questions and they're just saying, give me your bank statements, that's not going to get you anywhere, because they really need to understand what the problems are in your business. So I'm actually saying, just please come and see a good broker and have those conversations, and don't be tempted to go online and pick the first loan you can get, because the other problem with that is that a lot of people are going online and applying for a few at a time, and they don't realise that each inquiry form they're filling in is actually an application, and that's actually hitting their credit file. And I've seen a lot of clients coming to me with credit scores of 300 because they've simply done nothing wrong. They've just gone onto the internet and thought they made inquiries, and they've made 4 or 5, but really it's hit their credit file 4 or 5 times, and maybe they've gotten a no from someone, and that's really taken a huge impact on their credit score. And the very last mistake I want to talk about, which is another really big one, is people using finance offered by their FPOS card providers. This is a real big problem right now. One of the main issues with something like this is because the money is given to you pretty quickly and taken out of your FPOS machine just as the money comes in from your clients, you don't actually have any visibility on your cash flow. So I might get paid by a customer, but before I even look in my bank account, that money's gone out to pay this loan, because the people providing the finance are the people in charge of your FPOS machine. So they've got full control. So what then happens is if your business slows down and you suddenly have a bad week, you can find yourself unable to pay your staff, the tax department, all the more important people, and your business can grind to a halt or even suffer greatly. So what I would say is be really, really careful. Yes, these loans will come pretty quickly and be very easy to get, but these people will have access to your FPOS machine, and they're the first people who they get to take the first pick. So, you really don't want to do that. You really have no control over something like that. So that's a real dangerous mistake to make. As I would say, come and speak to a good business finance broker, someone who understands your business and someone who has a wide range of lenders who can take you to the banks, who can take you to all the specialised lenders, not just to the bad end of town at that 55% to 75% range. Because look, as a business, your cash flow is never going to recover from something like that, and we don't want to see you at that insolvency end. So they're my 3 mistakes.
Watch out for traps on the internet is always good advice.
Oh, yeah.
Don't fill in those forms because they're hitting your credit rating.
Yeah.
My goodness.
Yeah.
You think you're just signing up to a newsletter you can junk, but no. And watch out for those FPOS machine finance arrangements as well.
And plan ahead.
Plan ahead.
Make sure that you plan for those quiet periods.
We've called this session Stress the Strategy, and I think in all of the scenarios that we've heard, the common thread is that people are starting to feel stressed about things, and what the remedy for that is usually you just start by talking to someone who knows what they're talking about, and you start to feel a lot better. Don't spend your wee hours stressing and worrying, looking up things on the internet and filling in forms. The next day, just make contact with somebody who knows a little bit more about this particular area, and you'll start to feel better.
That's right. And Michael, I just want to say that, look, I can get finance for these clients just as fast as someone on the internet, maybe even faster.
Right.
But I'll get the right kind of finance.
Yeah.
So I think that's the better way to do it.
Good tips. Sam, we're going to come back to you now. We've talked a bit about how business can go wrong when it comes to cash flow. We've already touched on quite a few things for people to avoid. I wanted to see, Sam, if you had any other top tips for businesses when thinking about, what do we need to avoid doing?
Sure. So I think probably not directly cash flow related, but the first thing that we'd usually look at with any business is their corporate structure, to make sure that in the event of the worst case scenario, for example, their business does fail, which does happen, and it's not always the fault of the business owner, it can be external factors, it can be whatever, to make sure that their other assets are as protected as they possibly can be in the event that happens. But from a cash flow perspective, I think the big first thing that we'd look at with someone is what is the cash requirement of their business? What is the working capital requirement? And every business is different. If you're doing government contracts and you get paid in 90 days, but you've got to pay all your contractors every week, then of course there's a gap there. And understanding what that gap is, and then working with Renati, for example, to fund that gap or to decide if they want to fund it themselves, is the first step towards that anxiety that you talk about. Always understanding what is there and taking action towards it can hamper that. So that's the first step. I think understanding what the requirements for cash of your business are, and then at times that will mean that there needs to be debt or there needs to be funding from somewhere, and that's not a bad thing. The next aspect would be to make sure that you do that forecasting. I think on a 12-week rolling basis, we usually do forecasting with clients. Doesn't need to be anything flashy, no fancy reports or anything. Just going, how much cash are you bringing in? How much are people paying you? How much are you paying out? I think debtor management is another big one, and I think every small business, medium business that exists struggles with this balance between relationship versus debtor. So we get a lot of times when people say, well, I support that debtor, I don't chase them to pay me because we've got a good relationship. But it gets to the point where you have to say, well, if we have a great relationship, then surely that person will understand that you need to be paid so that you can fund your own business expenses. That is a big thing that we try and drum into clients, is don't let people not pay you because you have a good relationship. Help them in every other way that you can, but don't let them not pay you on time, because it's a huge issue for a lot of businesses at the moment. As Renati was saying, people not paying each other is a real issue at the moment. And like you say, the same.
My turn to hold that
around.
$20 note. It's my turn.
Yeah. I think, so those things combined, and just staying on top of it and making sure that you understand what your upcoming tax liabilities are. So a lot of people have no idea. They're a year behind, and so they've got this year's tax, and they've also got next year's tax that they've got a provision for, but they're not doing that. Same thing again, understanding what it is allows you to plan for it, allows you to make the appropriate decisions and not go out and spend that money on something else.
Good tips. We're about 8 minutes away from the end of the session. There's still more to come. Michael, you were talking earlier about the ATO going hard on businesses, and particularly they are in a position to chase people personally for ATO debts. Bit troubling, but that is the reality of the world we are in. Did you have any other suggestions? What should businesses be doing to avoid this situation? If a business does have an ATO debt, what should they be doing in terms of debt recovery? We talked about looking at your business structure, but I think it's all a little bit too late once you've got that debt to start thinking about the company structures and effective tax minimisation techniques. But what do you have for us, Michael?
Yeah, look, and I think, it's certainly, I agree, it's way too late to be talking about structure. But I think, things to take away from today is that, businesses will have ATO debt. I've just explained why we're there and how many businesses out there have it. But I think what I want people to understand is that there is, A, you're not alone. B, there is help out there. But I think the main thing is there's almost always a solution. I think we see a lot of business owners and, they look 10 years older than they actually are, because they've been sitting there worrying about their ATO debt for 12, 18 months, and it breaks my heart that it's taken that long for them to find us. But, 97% of the businesses we see, we fix. They don't need to go down an insolvency route. They don't need to go through a small business restructuring, because those things really have their own problems attached to it. There will, and there almost always is a solution. I guess two parts of your question. Firstly, in terms of how to avoid getting ATO debt. Well, partially it's what Sam's always been saying. Have visibility of your tax position. Ask your accountant or your bookkeeper, your advisors, what are my tax obligations coming up? They may not get it perfect, but you'll get a really good idea. So you do, and when you know that, when money comes in, you put it in a separate account, that's your tax account. The number of businesses that we see that have a tax account, very, very small. Otherwise, we probably wouldn't see them. So I think that's the thing. But if it does get into that situation where they do have ATO debt, again, it's not the end of the world. That said, I talked about the fact that the ATO are going hard. They're going hard. But most importantly, they're going very, very fast. I used to say to people, you've got 12 to 18 months from a nastily worded letter to they're going to wind the business up. It's not that anymore. We're talking weeks. We've seen a number of businesses where between 4 to 6 weeks they go from you must pay your tax to they've got a winding up application, and along the way they've been received this thing called a director penalty notice, which makes the director personally liable. So it happens very, very quickly. So you need to engage quickly. The other thing I often hear from people is they say, oh, we haven't heard anything from the ATO, so it must be all okay. In the current environment, silence is not your friend. Absolutely not your friend. The ATO's got a lot of automated systems. Things are happening. Just because no one is ringing you or writing to you doesn't mean you're not moving through their system, and then purportedly out of the blue, you get this nasty surprise, be it some sort of legal letter or some sort of enforcement thing where they've garnished your bank account and all the money's gone out of your bank. Or they've reported you to the credit reporting bureau. So you need to move quickly. Coupled with that, you need to engage properly. The ATO require what they call active engagement. Now, rolling back 18 months, 2 years ago, it was enough to be talking to the ATO and maybe even making some payments. But if you're engaging, under the Act, active engagement is in an active payment plan. If you're pregnant or you're not. If you're in a payment plan, you're protected. If you're not, you're not. So you need to, as I said, not only engage quickly, but you need to engage properly. And the ATO have very strict legal practice statements. For those that remember the Little Britain series, Computer Says No, that's the ATO. If you put in an application that they cannot approve, they won't. And so you need to tick every box in the legal practice statements, and that's why it's moved well beyond. We get about 35% of our work from the accounting profession, and they used to say to us, we'd put any old story into the portal, and the ATO would approve it and generally remove the interest. They're now saying, that's not working anymore. They're asking us for all this extra information. They're asking us, all this financial information, non-financial information. How did you get there? Why should we support you? That's all in the legal practice statement, and it's been there for, 10 years. The difference now is the ATO are requiring that, and they weren't requiring that before. So whilst people say the ATO are going harder, in one sense they are on some of the terms, but what they're really doing is saying it's not enough for you to come to us and say, we can pay this debt back and here's our offer. They need to understand, is the business viable? Is the business really going to be able to support those payments? And they're actually interrogating that. And if you don't put the right evidence and in the right form, it's a bit like going and asking for a loan. If you don't give them the right information, Computer Says No. It's the same with the ATO. But look, I think, again, what I want people to take away from this is there is almost always a solution. 3% of the time we say to our clients, maybe you need to look at a plan B, and then we can direct them to the right people who do it properly. But that's very rare in our world. I say to all those business owners out there, don't worry if you owe money to the ATO, but for God's sake, do something about it. And there will be a solution. We'll work with you. We might need to bring some funding in. We might need to help you with some of your systems and structures. We don't do that. Most of our clients are good businesses that have had things happen to them. Somebody didn't pay them, or they've had some issue. There's still a lot of debt hanging around from COVID. And from the Commission or the ATO's perspective, COVID ended years ago. But we all know, anybody in business, there's still debts hanging around from there, and there's still impacts from that. And we can explain that to the ATO. They'll still listen, just not as heavily as they would during COVID. But again, there are solutions, but you've got to act quickly and you've got to act properly.
This is the other kind of long COVID, is the sort of financial impacts that we're feeling now. The can has been kicked well and truly down the road. Renati, we've got a couple of minutes left, but I'd really love to hear a little bit more about what are the top tips for businesses, either in assessing their current finance structures or looking at refinancing. What are your top tips?
Well, my first tip actually is if you are feeling the pressure, let's have a chat, and if you aren't, let's plan. So a lot of businesses at the moment have actually suffered from cash flow because of the new changes from the 1st of July. There's been a rise in how much you have to pay for super. There's been a wage increase for minimum wage. So there's a lot of small impacts, especially if you have a big amount of staff in your business. That's going to hit your cash flow quite hard. On the 1st of July 2026, payday super is going to come into effect, and that means you're going to actually have to pay the super when your staff get paid, which means if pay week's on Monday, the 1st of July, your super has to be paid Monday, the 1st of July. You can no longer pay that super quarterly. So what that's going to do, especially with businesses with a lot of staff members, is create a huge cash flow issue, because you're going to have to find that cash pretty quickly. So one of the main things I'm saying is, at the moment, if you're feeling a little bit of pressure, let's actually start to plan. Let's talk. Let's see what are your challenges, what kind of things, why do you have that cash flow pressure? Because things like ATO debt, that is just a wider symptom of cash flow, an issue with your cash flow. If you didn't have a cash flow issue, you'd be able to pay your ATO debt. So the biggest thing we want to talk about is any pressure, let's talk. If you want to start planning for when you anticipate some pressure, especially with the 1st of July changes of 2026 for super, we should definitely start planning ahead. So that's my first tip. My second tip is talk to your broker regularly. Just because you get one business loan one day, it doesn't mean you don't need to keep looking into your finance, keep understanding what are my current challenges, how is my business changing, what are my plans for growth. So we've really got to understand where the business is going and what the business needs are, because business needs change all the time. You can come up with new challenges that are unexpected, so we really want to start planning ahead and be ready to meet those challenges and have finance in place for that. So that's my second
So
tip.
if you haven't thought about it for 12 months, is it time to be thinking about it? Is that the sort of time frame?
Absolutely.
For sure? Yep.
I would say definitely at least speak to your finance broker every 12 months, but maybe every 6 months.
Yeah, right.
Or I've got clients who sometimes call me once a month just to say, hi, Renati. I just want to tell you what's been happening with my business. And you'll be surprised at how many times we actually pick up that, hey, you know, Renati, I need to buy 3 more utes and I want them in a month. And I'm like, okay, so let's plan that. Or they might just say, you know, we were thinking of a commercial premises, but you know, oh, there's something going down the road. I put a deposit down. I was meaning to call you. So you'll be surprised how just saying hi and seeing how I'm going, we can talk about all sorts of things. Sometimes they'll ring me up and say, you know, I haven't done my BAS yet, and I say, you know, better get on it because, you know, from what I'm hearing, they're coming after people who aren't lodging their BAS on time. You better get on with it. Or sometimes I even get clients who I've met 6 months ago and we haven't chatted for 6 months, and they might ring me up and say, look, Renati, I'm in a lot of trouble. I got a letter from the ATO. And I say, well, you know what? Let me introduce you to Michael from Tax Assure, because he can sort this out for you straight away. So always happy to have a chat with anyone. And look, even if you're not happy with one of your other professionals, you know, obviously we work with Murchisons, we work with all kinds of good accountants, and we work with the best. We're looking for accountants who are actually planning with you. They're not just doing your compliance work just once a year, and who are helping you have transparency and letting you see the cash flow in your organisation, how it's moving, and they're helping you plan ahead. So we rely heavily on working with you and working with, you know, your other advisors, and I can't actually stress enough how important it is to get in touch. And that brings me to my last tip really nicely. Make sure that your finance broker, your accountant, your tax negotiator, and all your other advisors are talking to each other. You know, you could have a really great strategy, a really great tax strategy, but you might not have the finance in place to, you know, meet that strategy. Or you might have fantastic finance, but it doesn't match your tax strategy. It's not working from an accounting point of view. So make sure all your professionals are speaking, because when we work together, and Sam and I have seen this many times, and same with Michael and I, when we work together, we actually can get much better results. And what you've got to realise is you're getting a level of expertise from Sam that I can't give you. And I'm providing a level of expertise in the finance space that, you know, Sam's an accountant, I'm a finance broker, we're all different, we all have different experience. So you're really getting the best, you're getting, you know, all the best experience all put together, and we're all working really well together. So that's my last and final tip. So really let your advisors work together. It's really important.
Great tips. Thank you very much. That is all we've got time for, but it's been a really interesting discussion. Renati Barel from World Class Finance. A round of applause from our audience there. Michael Moon from Tax Assure. Thank you very much. And Sam Stringer from Murchisons. Thanks very much. Hope you enjoy the rest of the afternoon. More to come for the Western Sydney Expo. Thank you very much.